So video in the program that you're going to be receiving is the dynamics video. What is dynamics? What do we utilize? The different indicator. And the specific one that we're going to be going over today is the 50 EMA. Now, this video is not going to be too long, but it's important. As every other video, you are taking notes. So the first things first that you always want to gather is to get the indicator itself, right? So we're going to go up to the indicators tab and we're going to go to the EMA settings here. You can either take the EMA, this one, or you can take moving average exponential. Once you click on this EMA 2050, this is the author that we currently use. You will see that it can open up until this stage, right? So once you get onto the settings, you want to double click on the settings here and you want to change the length to 50. It's important that you change the length to 50 and make sure the rest of your settings are all the same. So as you can see, what the EMA is basically the moving average of exponential price, right? Exponential moving average, right, of what price is currently doing. So we can see it's currently on, and that's what this blue line here is for. So the way that we utilize the EMA is we combine it with our strategy, how we actually take ideas, how it develops, etc. So we're going to take a GBP USD here just as an example, and we can clearly see that average moving price, and we can even see a little example of utilizing it there, but average moving price is obviously bullish, right? We can clearly see that. One thing that you'll notice is that price 10 to 1 loves to respect these areas. For example, if we look at GBP USD here buying up, we can see it pulls back after breaking a high, tapping into EMA. Pushes up, once again pulls back, not exactly touching it, but a pullback, comes back up, pulls back into EMA on the 30-minute time frame, goes up, pulls back into it, hovers around it. Now this is important to understand. Price is not always going to tap right onto EMA and bounce. Sometimes we'll get areas like this where it consolidates within EMA. So we utilize EMA to combine with the other confluences. We are not just taking trades based off EMA, right? But it's going to help us identify a good entry point. It's going to give us more confluence in ideas on a day-to-day basis. So here we can see prices obviously struggling, right? This is obviously due to the massive bullish momentum that we had the past few days. Price eventually goes back up again, taps EMA over here, starts to rotate, breaks through it, hovers within this area again now, and then eventually what we can see is price actually respects it after breaking heavily below it, pulls back into it, and there you can see price actually respecting it once again. Respects it, breaks a little bit above it again, hovers over it, then respects it one more time but doesn't break the high, rotates one more time, goes down, respects it but breaks through. But you will tend to want to see is, yes, we're on the 30-minute time frame. As we drop lower time frames, this is how we align our trade idea together, right? So we're going to take, for example, let's look at a trade idea here that we developed. Asian range being created. We can see price obviously extending itself above overnight high here at this point. Supply and demand area, of course. And then look at that on the 15-minute time frame, we can see the EMA is aligning with the supply and demand area. We want price to pull back into this. EMA obviously to align quite nicely and then start to see rotation off our supply and demand area. Let's see what happens. Of course, we get that tap off EMA within our supply and demand and boom, TPs are hit. That's essentially why we use and how we use the EMA, right? Let's go through another example here. Utilize EMA in many different ways too, right? So obviously that's defining good entry points by utilizing multiple confluences like supply and demand, Fibonacci tool, overnight high, supply and demand areas based on value areas, as well as our EMA. If that all aligns, it's a pretty good setup. Remember, you can't just utilize one confluence with confirmation in your idea. But if you guys watch the risk management video, we're also utilizing what EMA to manage. Let's say price is running up here, okay, and we're going to get entered at this point here. Let's say we're going to look for longs over here. We're going to put our take profit up there and our stop loss below that supply and demand area, okay? Just for hypothetical sake, let's put it over there. EMA will be dragging around about this area, okay? And essentially what we can see is then price eventually moves upwards, right? Pulls back. If price breaks the EMA, then 10 to 1, what we're going to be doing is we can actually minimize our stops, because if price breaks EMA, yes, we still have a supply and demand, but we don't want to leave it for chance to see corrective structure moving downwards. So by utilizing EMA, we can actually manage our trades more effectively. Okay, so let's say price runs up higher. We know EMA is already at this point. Once we see EMA being broken over here, essentially we need to be set at BE at this point, because if it does break, as I said early on, 10 to 1, we'll start to see corrective structure back to the downside. And instead of taking a full loss, we're already predicting the market that and protecting our risk and capital by minimizing our stops, because EMA is way above our entry point and we're getting good bullish momentum on this trade idea. If it does break, of course, we don't want to take a loss on an idea that we could have hit break even for, right? And as obviously price starts to rotate higher, we can start shifting our stops as below EMA as price starts to run exceptionally to our TP, right? We're securing more profits as price is developing, right? Another way that we can utilize EMA is actually identifying on the higher time frames. For example, on GBP USD here, right, we can see on the 4-hour time frame that clearly we've been in a bearish momentum for quite some time. From this high, this is bearish momentum going all the way down. But of course, remember, price doesn't just go straight down. It does its small little pullbacks, as I've explained to you in these videos. It does small pullbacks like a little step formation, right? And as we can see here, EMA, we're traveling above. So if price had to bounce one more time off EMA, we probably would have seen corrective structure go up there. But what did it do? It broke below it, retested it, struggled to hold, again, stalling out in this area, but then once again, breaking below that EMA mark, which leaves us to that bearish momentum again, right? As you can see, it's creating that lower high, lower low, lower high, lower low, lower high, lower low, lower high. And as we're going like that, we're creating those lower highs and lower lows, right? Price pushes once again above EMA, but then starts to fall because it's struggling to hold. If I jump to a higher time frame again, we can see that a major shift in price. Let's just remove all of these things here. On the 4-hour EMA, we are traveling below price at this level, so it's already predicting the market beforehand. But something that we can take a look at is, okay, cool, we're selling off again. Why? Because the market doesn't just go straight up, it likes to pull back. So it's important that we can take a look at the daily and see, when we're identifying our trades, where is price traveling on the EMA? We can see the first time it pulled back, it almost tapped EMA, but then started to rotate higher again, basically in a support and resistance zone, as we can draw out there. Let me just make it a bit more simpler for you guys. A little bit of a support and resistance zone with EMA at that point, bouncing off it almost just bouncing off it slightly, running higher, but does not hold price and start to rotate higher. It actually starts to fall once again. Then eventually we drop below daily EMA, and then we get this massive sell-off pressure. So because we're above daily EMA, it's always a concern to think, okay, cool, what is price going to do once it reaches these higher time frame EMAs? Obviously, the higher the time frame you go, the stronger the EMA is going to be. Why? Because obviously there's more power in a higher time frame. So the daily EMA is going to be a lot stronger than the 4-hour, but we can start to get early idea of what the market is going to do as we start to drop lower time frames. So as I said, the 4-hour, here was that point where price pulled back. Remember, on the daily EMA with that support and resistance area, we can see we were below 4-hour, but we just bounced off daily, and then we get to see that rotation. But price once again pulls back into 4-hour EMA, starts to rotate off it and start running lower like that. Then we get the break of daily EMA at this point, and as you can see, we're also below 4-hour EMA, which inevitably we see that momentum running further down, right? So there's many different ways that you can utilize EMA. Its most important thing is aligning it with our trade ideas that we're developing, right? Because that makes a lot more sense, and getting more confluence in our idea totally. So you guys will start to pick up this. It's practice makes perfect, building ideas. So make sure you are taking notes, make sure you have the settings correct, and then start utilizing it on a day-to-day basis, because this is what's helped me and it's going to help you in the future too. So I hope you learned a lot from this video. We'll get into the next one. Peace out.